welcome back to the Prepared Mind channel. Wow, there's a lot of stuff going on out there. You know, shit hitting the fan it's not about, or it doesn't have to be about a single event. Typically, when I really dig into the history of prior instances, there's not a single event that drives these wild changes. It's a culmination of things. It's the pre-existence of other problems that exacerbate the one that finally sets things off, right? It's the straw that broke the camel's back. Now in 2007, 2008, it's my opinion that the straw that broke the camel's back was the housing market. It was being heavily inflated, and they were pushing loans onto people who didn't have credit. They had no down payment, they didn't have a good job. They were still able to buy homes. And they called them liar loans, meaning, but I knew them as stated loans, stated income. You could just state what your income was, and it could be a lie. And no one checked, and no one cared, and you got to move into a house at that new price. They did it to drive the real estate market. They did it to drive the house building market. Because if everything's selling, shit, you guys, remember I'm a general contractor and developer, you guys need to build more houses. That's what you need to do. That will be good for everybody, right? Keeps everybody working, keeps everybody in a house, yada, yada, yada. So that was part of the game. And when that started to roll over, started to slump, I was like, uh-oh, there's some big problems here. We ended up with the Great Recession. And I'm not saying that it was all housing and that was the big problem. It was a lot of things. We had a debt problem then. We had a deficit problem then. We had lots of other economic problems, but that was, I think, the big key. So because of my background in real estate and building, I tend to look at that sector as a major indicator that will be the straw that breaks the camel's back, or be the 2x4 stud that breaks the camel's back, or it could be a contributory factor, or an indicator that other sectors are also weak. Remember, if there's no jobs, there's no money, and there's not the money to buy houses. So it's not that the housing market is failing, it's that the job market is failing, or this is happening, or that is happening. Now, before I get into this report, and I have many cited sources, before I get into the report, it's important to note that there are areas that are seeing tremendous growth in housing right now. And I just got off the phone a short while ago with a good friend who says, man, you can't believe it. Can't find a house, can't get cheap rent in this area because Californians are moving in. Well, a large California firm moved in, and so that's going to cause an influx of people, as well as just refugees leaving the state of California. And they can find a cheap area, and it's drive the prices up. My son wants to get his own apartment, and the area he's trying to get into, there's nothing for rent. Right, another friend of mine has anyways, relatives, they're just trying to move around and they can't find places in certain areas. But that doesn't give us, that's anecdotal. It doesn't give us a look at the entire economy, right? So I want to take a look at the entire real estate market and see what that is telling us about the world economy. And before we get into these news stories, I want to share one more. And that is that the liar loans are coming back. The no job, no down payment, no nothing, nobodies, no credit score required to get a house loan. Those are coming back. They're going to have a new and exciting name for them. They're going to change that name. They're going to try and fool people, but it's coming back. So what year are we in relative to history? Is this like 2006, 2007? Yeah. I also think things are going to move faster now than they did back then. Everything is faster. The transition from phase to phase to phase to, oh shit, it just hit the fan. It's faster. So what would back then be 2004, 2005, 2006. It's probably more like 2007. By the time they realize, whoops, we need to start doing these loans again, we're that much closer to shit hitting the fan. And the effect, the amount of people out there who have no job, no car, no income, no down payment, and no credit, they're not going to run and go, you know, I need to buy a house. The market is exploded, right? It's huge in value. In fact, it's starting to roll over. And we're going to get to that. Why should I buy a house? Why should I encumber myself? Right? This is a way, in fact, it is very honestly, once the market starts to roll over, which we're going to demonstrate it has, banks, lending institutions, mortgage brokers, mortgage houses, mortgage banks, whatever you want to call this entire industry, which is a huge part of the overall economy, they're going to want to put somebody in those empty houses. They don't want empty houses. To them, they'll go, oh yeah, you're buying it. It's kind of like a rent to own. They want you in there making payments because they're not getting money while that house sits vacant. So yeah, they're going to give that house to anybody, whether they have a down, credit, or even a fucking job. They just want them in there, right? Somehow they'll come up with money. They think they've got a house and they're a homeowner. So they're going to fight, claw, steal, right, to get money to make a payment on a house that they shouldn't be in. It is incredible. Now we're on to the stories, the news stories, and then we'll have commentary along the way. And again, I'm going to go around the World Wide Web, show you guys that it's not just one angle, it's not just one perspective, it's not just one sector. We're talking about the entire housing market. We're talking about the entire housing market around the whole globe, the planet, that big marble, that fruited plain. Okay. This is a CNBC.com article, mainstream of mainstreams. They aren't trying to hide this. Or you could say they're hiding it in plain sight. Real estate in the Hamptons had its worst spring quarter in 8 years. Real estate prices, sales and prices in the Hamptons continued to fall in the second quarter, marking a year and a half of decline. So yeah, the second quarter was shit. And if you just saw that in the headline, you'd be like, okay, yeah, bad quarter, whatever. Just whistle while you work and off you go. No, it's a little more terrible than that. It's a little shittier than that, shall we say. Marking a year and a half of declines. That's 6 quarters. 6 quarters. It was the worst second quarter for sales in 8 years, meaning not only are they down, but this was a sharp decline. The worst they've seen in 8 years. What was 8 years ago? Well, 8 years ago was 2011. We were in that Great Recession. And they were starting to pump free cash all over the place, going, oh yeah, it's going to have a great trickle-down effect. Let's give free money to banks and corporations. And then it'll just get to the little people and everything will be fine. Anyways, Hamptons. What is the Hamptons? If you don't know what the Hamptons is, they're really posh mansions, very nice real estate, wealthy area. It's where the wealthy in New York City can live if they choose. You take a train out of the city, get in your little commuter, whatever the hell you got, go out to your house, and you live this luxury real estate dream, and then you go bust your ass in the city and you come back to just beautiful palatial estates, views. You know, you're living in the good neighborhood and you're working at the zoo in New York. But if just standing alone, what would this tell you about the Hamptons? Just standing alone. Well, there's a problem with real estate. They have too many Hampton homes. No. Let's see. New York. They don't have any money in New York City anymore. Well, wait a minute. The stock market is at all-time highs, right? Stock market's at all-time highs. Shouldn't the money be all over the place? Where's the money, in other words? Because it's the New Yorkers that are rich that can buy these houses. But they've stopped. It's going down. Something is happening in New York City. The epicenter, the hub of money, finance. You bet there's a serious problem there. There's stuff going on. All right, well, let's take a look across the pond, shall we? We're going to go to Stock Talk Journal. And we've got an article titled London Bust. The Greenwich real estate sales plunged 20% in a year. Whoops. That sounds a little bit like sounds a little bit like the Hamptons, does it not? According to the land data, should I do the English accent or the news accent? I'll just do John. According to land registry data compiled by Hamptons International, that's funny. Hamptons again. There were 897 sales in the SE10 postcode area covering Greenwich, Maze Hill, Greenwich Peninsula, and they were down 20% from just a couple years ago and down 29% since their 2014 sales. Now, this area in London is also nice, richy, right? It's no starter homes there, right? It's Greenwich. So what is this telling us, right? They're having real estate problems in London, and London is another large financial area. Very large financial area. We're having problems with the rich end, the upper end of things. It's kind of the point I wanted to make here, and it's not just the United States, right? So we're going to go to the next article, and we'll take a look. What's going on in Australia? Why did I pick Australia? Well, it's kind of, you got the United States, Canada, England, and Australia. Those are the Anglo countries. Anglo meaning English. The Anglo-American, Anglo-Canadian, Anglo-Australian, right? We've got basically British common law as the foundation of our government philosophy, basic, the way things should run, the administrative philosophy. Anyways, housing bubble pops, update on Australia. It is rare that a housing market... It is not rare. I love how these articles, go read it. It's rare that a housing market makes such a defined U-turn after a long, hard surge, meaning it goes up really good and then what? Why did it come down? Well, because markets go up and down. They're seeing the same problems in Australia. They've had this incredible surge upward in prices or valuation. It's because banks, after the Great Recession, which was worldwide, held on to homes, drove the prices up, and they did something else. But they drove prices up. People were like, okay, the market's recovered, everything's good, I got all this money in my house that I own, so I'm going to take out home equity line of credit, I'm rich, I'm wealthy, I'm going to go on vacations, I'm going to go into more debt and spend money, because my house is worth all this. Even though I only own 25% of it, the value's gone up so much, I've got all that equity just sitting there. I'm rich. I can debt spend. And this is the psychological game they've played, and they have admitted it. The Federal Reserve has admitted it. Right? Government has admitted it. Financial institutions have admitted it's the feel good. When you feel good, you'll spend more in this consumer economy. It's not an industrial economy, it's a consumer economy. The most expensive quarter of the market in Australia got hit with the hardest, with prices down 8% in July, year on year, right? 8%. There's continuing. Australia started seeing trouble about 6 months ago or a year ago. And I'm talking noticeable trouble, can't deny it trouble. And it's been coming down since. And you can take a look at the graphs and the charts. They're really pretty, great colors, interesting zigzagging lines. But they're coming down and continuing to come down. And you can't say, well, 8% is no big deal. I tell you what, take all of your wealth, whether it's 10,000 or 100,000 or a million, and take 8% of your wealth and just send it to me. Send it to John, care of the Prepared Mind. Send me 8%. It's only 8%. Who gives a shit? It's just 8%. Year to year, 8%. Send me 8% every year if it's no big deal. I will be a wealthy mofo if people did that. But it's not like you're taking money out of your house and just sending it to John or someone else, right? It's secretly just disappeared. It quietly evaporated like steam from a tea kettle. It's just gone, right? This is what happens when the market just starts to evaporate. That's a great term. I like evaporation because it's there 1 minute and the next minute it's gone. Right? Take a glass of water on a hot summer day and go throw it on the sidewalk out in front of your house and watch it evaporate in like 10 seconds. Sydney, Australia, London, Perth, pick a city anywhere. California, major cities, their real estate is topped out and it's rolling over. What is contributing to that? Is it just local economy? Well, here's a great story. This comes from Global Intel Hub. Right? globalintelhub.com. A massive pullback in international buyers purchasing U.S. real estate has been seen in the last several years, resulting in the softening of housing markets across South Florida. Reported the Palm Beach Post. Okay. It looks like foreigners have been buying real estate in American markets. They're probably also buying in London markets, nicer parts of England, Canada, Vancouver, Toronto, Quebec, right? Australia, you've got Melbourne and Sydney, as well as Perth and other major cities. Foreign investors come in when a market's depressed and they'll buy up real estate. They'll wait for the market to go high and they'll sell it off, or if it's a commercial property, they'll move businesses in. If the market's growing and expanding, when the market starts to contract. When markets, as in economic markets, manufacturing, retail, housing, when those start to contract, they, one, quit buying, two, they sell off. Both of those things contribute to a reduction in the value of real estate. I should just say the reduction in the perceived value of real estate. And I love real estate. I made a lot of money doing real estate. If you know what you're doing, you can make a lot of money in real estate and you own something real. One of the turnoffs for me, as an aside, is I don't like paying 2% out annually in property taxes and other fees and bullshit. Right? It's a way to suck money out of you. I don't like sales tax, which is why I'm no longer saying if you've got money, go to AppMex. If you're in California, check them out. Make sure they're not charging sales tax. 7.75% on a transaction. I don't like it. I don't want to play these games anymore. It's why I live in a fifth wheel, so I don't have to play their games and pay them just to live. All right? I want to minimize what these people, how they screw me. Anyways, back to the stories. South Florida has taken a massive hit. Sales crash 50%. Okay? And again, there's the reported by the Palm Beach Post. You can go in here and look around and look at these news stories. So local business isn't supporting the growth that has been happening and was fueled by quantitative easing and exceedingly low interest rates. Now, it's important to note that in the world of real estate mortgages and loans, they have kept those rates very, very low. And they're pushing them lower now. In fact, Wednesday, the Federal Reserve is supposed to give us a new, I don't know, it's like it's expected. There's going to be a rate reduction. They're going to give us a new rate. But in real estate and for the purpose of keeping the housing market going, which is a massive sector of the overall U.S. economy, housing, just to live in the dirt. They want those sales up and they want people buying and paying massive taxes, right? Property tax is so huge. So when the market is up, get this, when the market is up, say your $100,000 house is valued at $1 million. Well, the government loves to get 2% of your $100,000 house a year. But if they can increase that by a factor of 10, if your house is worth $1 million, they don't get $2,000, they get $20,000. And that goes to the states, and they pay money to the federal government. Remember, this is a complete corporate, subcorporate structure from the incorporated city to the incorporated state to the incorporated United States government. This is where they get their money, is all of the property taxes. They suck the living shit out of the money, and it goes to government. It's incredible how much they take from us. So they want to keep this value high. Governments do. But when it starts to go down, foreign investors pull out, people stop buying. They're like, it's not good. We've got a recession coming, and they're trying to hide this coming recession. They don't want to tell us about it. They don't want to scare people. Right? They want to keep it going as long as they can. They do. They want to keep it going as long as they can to, one, suck all the money out they can. That's why we're going back to liar loans, stated income loans, where you don't even need a fucking credit score to get a house. That's where they're going to end up going. They've started it in cars, automobiles. And look out. That is going to, it's already crashing. We're hearing all about it. They're hiding it. They're hiding their cars in production. But now we're seeing Ford, GM, Nissan, and other companies are making cuts. They're squealing like stuck pigs. Here's another story from the unassuming Economist. Now, once again, I'm picking another website. I want to show you guys the diverse places I go to get information about what is happening. Right? The jackass on welfare who's living in someone's house or paying rent at an apartment. The average person doesn't do what I do. They don't go looking around to see what is happening and what's going to affect us in the future. Where you want to be, where you don't want to be, why you should do things. I take all of this information and I literally boil it down and reduce it to what do we think about as preppers? What does this say about the state of affairs? What is causing these decisions to be made by banks? They don't just wake up one day and go, you know what? Let's start giving houses to people who can't prove that they have adequate income to live here and who have no credit scores. They don't just do that. There's a reason for it, right? At theunassuming.economist.com mapped the countries with the highest housing bubble risks, right? You have to scroll down. This is one of those sites that has lots of news stories. You have to go and kind of scroll down and find it. Right? There's a key housing market indicators. Earlier this week, Bloomberg published results from a new study by economist Niraj Shah as he aimed to build a housing bubble dashboard. Let's see if I can open that one up while we're talking. So this isn't one economist or one person saying, I don't think things are quite right. It's across the board. It's very mainstream. It's around the world. It has to do with local economies, regional economies, national economies, and the international economy. It's not a small deal. It's not a small item. This is the Bloomberg. I might as well put the fucking Bloomberg article in here, right? Want the lowdown on European markets in your inbox? Here they are. Canada, New Zealand. Yeah. Canada, New Zealand are the most vulnerable economies to a correction in house price, with Australia and the UK also drawing concern. But you can go down and they have a nice graph with all kinds of red, pink, light pink, white, green, dark green, which is, sectors that are in trouble or not in trouble. You can go check it out. Go check out where the trouble's at. There is a housing bubble dashboard. They're tracking what's going on. It's not hard to do. People, that's their job. They're doing it. All right, here's an article from Nation and State. Research and information about the state of our nation. Now, compared to the last time the U.S. entered a recession, it couldn't be worse. Okay, it's got a lot of technical stuff. It goes through global, U.S., Europe, and Asia, and it examines sectors, indexes. Indexes are measurements of how things are going, and it shows us that things are worse and worse and worse and worse, right? It has to do with our recession that we're coming up on, that we're facing, that we're entering. Is this what is going on, right? I started with housing, but we've got a problem across the board, right? Take a look at this article. With the most important week for news flow set to begin shortly, with the Fed expected to launch its first easing cycle in over a decade on July 31st, which is Wednesday, The only question investors want answered is whether the Fed will cut rates by 25 basis points or by 50 basis points. Either way, it's a capitulation. It's an admission. It's a confession that things are bad. Bad, bad, bad. Right? As Morgan Stanley credit strategist Matthew Hornbach writes, one needs to look at the first cut in 2007 without the benefit of hindsight, meaning the Fed's decision to cut 50 basis points had nothing to do with the coming financial crisis. It was about lessening downside risks coming from tighter financial conditions. Fast forward to today when it's about downside risk coming from global growth and trade uncertainty. In other words, he's saying they're trying to reduce the downside risk. In other words, they know the recession's coming. They know what's happening. They're trying to make, if we're up here and we're going to fall to down here, they don't want it to be a steep decline. They want it to be a gradual decline, the downside risk. They can't stop how bad things are up here, but they want to bring this lower side up. That's what they're talking about doing, right? Because the economy's crashing. Right? It's crashing. It's taking a shit. Get ready for shit to hit the fan. Chance favors the prepared mind. Thank you for watching this presentation. Share it with others. Take it for what it's worth. I'm not offering financial advice. I'm saying take a look at the news. Open up these links. Look around. See what's going on. See what you need to do, because you are the expert in your world. Right? I get my news from everywhere. I try and typically use a consolidated news source that's familiar and we can all get used to, and that's why I use Zero Hedge so much for citing where I get where you can get news from, where you can just go there and get stuff. And I guess there'll be good news there. I mean, there's good news everywhere. Epstein arrested, that's good news. Right? That was good news. But we're not seeing a whole lot of good news out there. Whether it's housing, industrial, right? You can see the PMIs. Whether it's in finance. The stock market is another source of good news. Holy shit, we're at all-time highs. You want some good news? There's good news. You must be rich because real estate is really high. But it's not proof or evidence everything's good. The stock market at all-time highs is not evidence things are good. It's just where we're at today. But are there other indicators? What does that mean is going to happen? Housing market always tails off. It goes through cycles, ups and downs. Same with the stock market. If we're at all-time highs, that means sell. I'm not telling you to sell, but I know what that means as an investor. You sell at the top. You don't buy at the top. Same with real estate. Unless you own your house and it's paid off and you like it, you at the top sell. You're supposed to actually sell before you get to the top so that it peaks out. Right? You're supposed to sell. Buy low, sell high. Here we are. Hello, everybody. You want your good news? There was some good news for you. It's time to sell. I'll talk to you again tomorrow. I am glad you enjoy these premium premium videos here on the Prepared Mind at Patreon. Thank you guys for supporting us. And good golly, it is just one hell of a situation we got. I'll talk to you again very soon. Tomorrow, chance favors the Prepared Mind is yours.